Join us. So Ashley, if you want to go ahead and start recording, I'd like to welcome everyone to another one of our town hall meetings. Appreciate your attendance and participation. We hope that these are worthwhile and meaningful for you and gives you some insights as to how to deal with some of the issues that present themselves from the COVID-19 and the CARES Act and some of the recent rulings and clarifications of policy coming from the Treasury Department. So I think what we'll do is we'll go ahead and turn the time over to the MACo staff and have them give you all an update. And before we do that, I just want to remind everyone if we'll keep you muted until if you have a question, you can raise your hand and we will find you and unmute you. Or you can use the chat box and type in a question, and then we'll have Eric or Jason respond to the questions in the chat box. We hope this session will last no more than an hour. So with that, we'll go ahead and turn the time over to Eric.
Thank you, Dan. I want to just start with some opening comments and then see if we can spend as much time doing question and answer as possible, given that hopefully all of you folks have seen the reimbursement form and the format that the state's using to make local governments eligible for CARES Act distributions. These meetings have been really important because we continue to both negotiate and get clarification from the Treasury and from the state of Montana about what they think are appropriate costs eligible for reimbursement. So I want to talk about a couple of them that have been problematic in the last couple of days. On the Montana Association of County side, we sent out that survey and we asked you to give us a sample of what your personnel costs had been from essentially February 12th or March 12th, the time of the declaration, the statewide declaration, through the end of phase 1 opening. That's May 31st. We asked you to give us the information as best you could for your public safety, which we categorized as your sworn law enforcement, your detention staff, and your public health staff. And we use that as the basis to just get a preliminary estimate about what the total cost would be, not knowing for sure what CARES and what Treasury was ultimately going to release as authorization to pay. Now, I'm making a point of saying detention because it was very specific in our request to our membership, and I believe in our conversations with the budget office, that we fully intended to make detention staff, the personnel costs associated with the detention staff, a reimbursable expense. They are under that general category that Treasury has defined, at least in our opinion, presumptively eligible. So public safety, first responders, public health were the three categories that are presumptively eligible. The state, as of yesterday, has clarified for us that they don't believe detention personnel costs fit into that category. So our survey included them. The documentation, I think some counties have already submitted, include those costs, and we need to figure out whether those are actually going to be reimbursable going into the future. That is new as of yesterday, and I wanted to share that with you. The state does not believe your personnel costs associated with detention are CARES Act reimbursable costs. I expect further clarification from Treasury. I also expect to find examples from other states where detention costs have been reimbursable through CARES, or more specific guidance from Treasury when another state has asked if those costs were reimbursable, because surely they fit under that presumptive category that Treasury has defined. If the state doesn't allow them in this first batch, that doesn't mean that the door is shut entirely. And that gets me into my second conversation I want to have with you. The reimbursement format was based on the state getting up and running as fast as they could to make local governments eligible to receive some CARES Act funding as fast as possible. But don't for a minute think that these deadlines, as they're referring to them, mean that you've closed the door on any period of time to make the request for reimbursement. It's just merely that they want you able to make the reimbursement request fast. If you don't do the first one, you haven't missed any deadline and you haven't shrifted yourself on any ability to ask for reimbursement or compensation for costs incurred during those time periods. Think of the dates as dates for the staff at the state to be able to process the applications and make the payments, rather than hard deadlines that you have to make your requests in by that time period. So you can wait all the way until the very end and request everything from the beginning of March through the end of December for reimbursement. You don't have to hit each one of these dates, and if you miss one of these dates, it's not missing a deadline where you have left money on the table. And with that being said, Jason, unless you have anything more specific to add.
No, I'll just reiterate on those deadlines. The reason they set dates was they wanted to tell local governments when they could expect payment. So when one of those deadlines hits, if you've asked for money, the latest you can expect your reimbursement is 30 days post that date. But at no point are they stopping us from reaching back to the very beginning, March 12th, and asking for eligible funds. So even if you miss something and you put in a request for this time, you can ask for those dollars in your subsequent request. On the form, I did notice, and I believe there is a mistake on under ineligible expenditures. The second to last bullet indicates a May 12th to May 31st date. I think they meant to say March 12th. I'm going to confirm that with them and get that corrected if it needs to be, but I think it does. Also, if you, just to make it a little easier, if you're submitting a request before we get clarification on the detention centers, and it's easy to break out your detention center costs, payroll especially, from your sheriff's and your public health payroll costs, and give it a separate line item on the spreadsheet. That way, if the state pushes back and says we're not paying for that, they'll still reimburse the rest of it, and it doesn't get caught. The rest of your reimbursement that we all agree is eligible doesn't get held up. Those were my comments.
So Dan, let's see if we can field some questions.
Yeah, does anyone have any questions? You do, go ahead and raise your hand. You can go to the side where the participants are identified, and there should be a little hand next to your name.
We also have questions that are in the chat box. And if you don't want to speak or you aren't able to, you're welcome to type those in the chat box. The first one says, did we lose benefits as reimbursable?
Great question. The current standard of negotiations with the state are that they want to reserve benefit payments for some future date. So CARES Act and Treasury guidance very specifically says benefits are eligible costs under that presumptively eligible. I believe benefits will be paid. The state wants to hold back because I think they're nervous about what those full benefits costs will be. And I'm curious to see for our member counties that submitted payroll costs with full benefits, how the state is going to treat them. They have acknowledged that they're eligible, and they've acknowledged that guidance from Treasury on May 28th also said that the state couldn't put further restrictions on eligible uses. So in my opinion, yes, your benefits are eligible and will be paid. I'm just not sure they're going to be in this first batch.
Okay, great. Another question from the chat. Are they making estimated payments based on estimated future costs, or is this more informational?
They're wanting that information on estimated payments or estimated future costs so they can budget for what that final distribution will look like. The only time I think we're going to get into the actual estimation in terms of payments is that last claim period in December. You will likely have to estimate what your total payroll costs will be through the end of December on that last reimbursement period, because Treasury is not flexible on its expiration date, that those funds have to be not only encumbered but spent by the end of December, or they're subject to recapture.
Commissioner Briggs, I have your mic open if you'd like to ask a question.
Yeah, my question comes down to, we have received directly from federal some funding into the health department that is not designated for how it is to be used. How does that impact our ability to claim the health department payroll?
Commissioner, I fielded this question in a couple of different ways, and I'm going to try and give a standard answer. I think the Treasury guidance on CARES Act is very specific about not being able to double dip. That's not the right term, but that's essentially what it is. In your direct allocations to your health department, I suggest that you find a way to account for those funds. And if you have to attribute them to payroll, do it from the beginning of the pandemic for as long as those funds last. And then know that you're going to be eligible for reimbursement for those personnel costs up through December. So allocate what you've already received if it has to go to payroll for the first period of this pandemic, and know and hold in reserve the ability to claim CARES Act reimbursement for those personnel through the rest of the year.
That's what makes it tough, Eric, because these funds basically just showed up as a lump without any instructions from federal on what they were to be used for. So we're having difficulty figuring out how to account for them in this scenario. safest way. I wasn't going to try to claim it up front. I was going to wait till the dust settled on the health department, because it seems like supplantation of funds, which is, there's another federal statute that says you can't do that either. But I wanted to know what the official line was. Thank you.
It's it'll be an accounting nightmare, but it's gonna be that same way for your FEMA funds, for your health department direct grants, for other sources that are eligible through this whole entire thing. We just all need to be really careful about how we've allocated CARES and other federal sources for those personnel costs.
Great. Commissioner Burrell, your mic is open.
Thank you. This is actually going to be from Commissioner Mitchell.
I'm wondering how how do I understand detention costs being reimbursable? I'm struggling with that, as I don't think it's appropriate, but someone could explain it better to me, please.
Commissioner, I don't know that
I want to know if Eric will answer, let his dog answer a question, or will he play us a song today, especially on the banjo?
It's the commissioner, it's the dog that plays the banjo, so he can't talk and play at the same time. And I'm not sure I can convince you of the eligibility for. I can convince you the eligibility for detention costs, but I'm not going to try and convince you that you need to make the claim for it. It's this: like law enforcement in the beginning of the pandemic, they changed their operating practices. Everything from what they were doing in servicing warrants to civil process paperwork to who they were arresting to what their practices were for law enforcement on the street. They changed and adapted significantly in response to COVID-19. Your detention center did as well, both in terms of decisions about who was being booked in, who was being released, how your judges were going to make expedited review for bail to get people out. I imagine you, like other detention facilities, saw a decrease in custodies throughout the pandemic. So your operations changed. And what Treasury has said on that May 28th guideline is that they've given this broad category of presumptively eligible public safety, which I wrap detention into that, just like I do with your sworn sheriffs, because your operations changed, your practices changed, and it was all built on responding to COVID-19. You had social isolation requirements, your PPE costs probably increased. All those hard costs are clearly reimbursable, but because they wrapped personnel and benefits costs for public safety, first responders, and public health, your detention folks are eligible. That doesn't mean you have to submit for them, but it means that they are eligible.
All right, that was a good answer. Not sure if I agree, but that was a very good answer, Eric. Very good. Thank you.
Yeah.
All right, we will go back to the chat box for a couple questions, then we have a couple more hands raised. So we will get to you. As a reminder, if you've spoken and don't have a follow-up question, if you would please lower your hand, that'll help us keep track if you do have a follow-up question later. So the next question in the chat, payroll reports are by employee or by totals?
The state is going to want to be able to track back accurately disbursements for eligible personnel costs. So your payroll reports can be in total dollar amounts, but there might be follow-up submissions or requests for a little bit better detail. I would resist sending any personally identifiable information with your payroll reports. Don't do social numbers, don't do hours worked, don't do anything more than if they ask for additional indication, maybe a name of who was included in the payroll report. But be careful about what you're submitting and try it in aggregate to start with.
Okay.
I would suggest,
Go ahead.
let me follow up on that if that's all right. I would suggest that on the spreadsheet, you just put the total in and maybe break it out from the detention center like we talked about. Was what you submit for documentation, do an aggregate report for payroll, but make sure you reconcile that report number with your list of individual employees and what you paid them, so that if you do get asked, or if an auditor were to come in and say, how did you get the $100,000? You've got that list of employees or a printed out list of each employee's pay stub that adds up to that total amount.
Okay, great. And what about the dates? Do dates apply to invoice dates or check date?
The dates you're eligible to make claims for start March 12th through this first phase of May 31st. So again, nobody's forcing you to make requests or payments for those dates, but those are the dates that are currently eligible. So if you only want to do a portion of them, that's totally at your discretion. Just don't bill for personnel or hours worked or benefits conferred before the 12th of March and wait until further submissions if you're going to do it after the 31st of May, essentially.
And it is a reimbursement program. So on the other side of it, it would be if you're asking for reimbursement, you would have had to have paid it.
Yes.
Okay. We're going to jump back up to the audio questions and then we'll come back to the chat. I have, it looks like H. Velk. I will open your mic. You're welcome to ask your question.
Yes, this is Frank DePriest, Commissioner. We contract our detention out with Valley County. If this is detention going to be funded, could we submit for what we pay?
Commissioner, that's a great question, and it's a good segue into something else I meant to talk about at the beginning. I think you're gonna want to negotiate with Valley County and have them submit on your behalf, and see if you can get a further distribution from them coming back. So if their costs for incarceration, i.e. their personnel costs, are at least partially paid by the CARES Act funding, they should kick some of that money back to you as a subrecipient.
Okay.
And the reason that jogs my memory is that we have several cases in the state where counties are by contract providing law enforcement services for cities and towns. And in that same scenario, the state has agreed with MACo that the cities and towns aren't eligible to submit for reimbursement for those contracts, but the county is. And if the county receives money for those law enforcement contracts, they should give it back to the local towns and cities that contracted for it. I didn't think of detention at the time, but I think it's exactly similar. So work with Valley. If they get money, a portion of it should come to you.
Okay, thank you.
Yeah.
Harlan.
Okay, let's go to call in user number 23. Your mic's open. We have a call in user. Let's jump. Eric, what about dispatch? Is that covered?
It is part of our pending negotiations. Yes, I believe dispatchers, they're your frontline first responders. I don't know that the state has agreed yet, but that is on our list of things to discuss with them.
Okay. We have another question in the chat. April 22nd, Treasury guidance lists expenses of providing paid sick and paid family and medical leave to public employees to enable compliance with COVID-19 public health precautions as an eligible expense. Is Montana considering these eligible costs, or are those costs considered benefits?
In additional Treasury guidance, specifically the guidance on the 28th, I think it helped further clarify. And let me see if I can give you an example. If a public employee was sent home to take care of their kids, but wasn't required to use any of their sick or vacation accruals, Treasury thinks that is sort of a sunk cost that's not reimbursable. If a public employee was sent home and was required to exhaust their leave balances, Treasury currently doesn't think that's reimbursable because they're not doing reimbursements directly to employees. If there was costs associated with that public employee being sent home to take care of their kids or family members, i.e. they had to hire, the public agency had to hire somebody else to do those duties, the cost for hiring the additional person is an eligible expense. But Treasury on the 28th further refined their expectation that they don't think any individual receiving compensation for being out of work during the pandemic that's a public employee gets direct compensation.
Okay. I'm not seeing any more hands raised right now, so we'll continue in the chat box. What about juvenile detention? We contract with Missoula County and we have youth in the facility for the full months of April and May.
That's a great question. I'd need help making a case that your placement of a juvenile in the detention facility, well, I mean, if you could make it COVID-19 related, I'd submit it. I would need help from whoever asked that question about how that's even tangentially related to the outbreak, but if it is, I'll help you make that case.
If Missoula County were to recover some costs on that, Eric?
Missoula County, I think, could submit for the personal cost for that juvenile detention facility. And if they did, it should be distributed back to the users of the facility, just like we talked about with Valley. I'll talk and see if we can generate some more questions, but I want to make one more finer point. The Treasury guidance on the 28th also further clarified that it's Treasury's expectation that 45% of the CARES Act funding distributed to the state of Montana gets delivered to subrecipients in towns, cities, and counties. $562 million is what that 45% accounts for with the 1.25 billion that the state has. And there is no way, looking at what I think we'll get for reimbursement requests, that the state is going to come, the locals are going to come anywhere close to 562 million in reimbursable expenses. That likely presents a problem later in the year for Treasury or for the state, because they won't want to give any money back to Treasury. And if guidance doesn't allow for revenue replacement or expand the list of eligible reimbursable expenses, there's going to be a whole ton of money sitting there that was supposed to be helping with this pandemic. As of today, there's an article in the Independent Record where legislative leaders were negotiating with Governor Bullock about making budget cuts right now. And the article finishes with a statement that says, of the 1.25 billion received by the state of Montana, they have spent 30 million. There's a lot of money. There's a lot of money sitting there to be dickering about detention center staff costs, personnel benefits, staff costs, and dispatch costs. There's a ton of money sitting there that if we don't appropriately make these reimbursement requests and get paid back on the local government side, I don't know what's going to happen to it.
I have a follow-up on the youth detention center comments. Eric, we have a memo from our county attorney about how access was limited to the youth during COVID.
I think whoever is the host county of the detention facility, unless it's a private facility, needs to make the request and then pay you back a portion of that. I'm going to put that on our list of things to talk about with the budget office. I think we meet with them next week.
Eric, do you want to talk a little bit about any other types of local government districts, et cetera, that might come forward to either the cities or the counties?
I do. Thank you, Jason. The primary issue is going to be your fire districts. And so your fire districts are not technically eligible direct recipients of reimbursement from CARES, but we're asking you counties to facilitate their requests for legitimate reimbursement requests. It was Stillwater County and Columbus. There's a contract between the two of them, and the fire district or the fire department in Columbus is going to, I think, work through Stillwater County to make the request for reimbursement. And we are encouraging all of you to work with your fire districts if they've had eligible reimbursable requests to submit those requests on their behalf. You can require the documentation so the state can make sure that they have the documentation needed to make those disbursements. And to ease concerns out there, the financial accountability rests entirely with the state. So even if you're making requests on behalf of sub-recipients like your fire districts, it's the state that's on the hook for compliance with the use of those funds. So they'll just require what they will require, and you can do the same of the sub-recipients.
We have another hand raised. Jerry Collins, your mic is open.
Eric, I got a question. Let me go back to how little the state has sent out. I heard it was what, 2.5% of the billion in the quarter. So you have brought up in the past about property tax relief. Is there any guidance from the Treasury Department? Because it sounds like the state might be questioning whether they can do property tax relief. Is there any discussion with the Treasury to give guidance on that? Because I don't really want to see the state have to send part of that money back. I'd like to have our ranchers out here in Garfield County have a little help with property tax. My question.
Commissioner, I agree with you. The problem with the May 28th Treasury guidance is they further explain that they don't think that it should be used for property tax relief because Treasury understands property tax relief to be revenue replacement for governments. We have asked both of our senators. In fact, I think it was this week we had our video conference in joint with the League of Cities and Towns and had Senator Tester on a Zoom meeting, and we asked specifically for him to continue lobbying for Treasury to allow for property tax assistance programs to be put in place with CARES Act funding. We've asked the governor's budget office, we've asked the governor directly, we've asked Senator Daines. We will continue to make those requests because I agree with you, and the unknown of next November in terms of delinquencies and the financial impact this pandemic will have for our ag folks, residential, and our business folks coming into the next tax collection cycle, I think could be significant. And it appears on its surface to be a perfectly legitimate property assistance program that could be set up by the state of Montana, i.e. you put criteria in place for what it means to be COVID-19 impacted. And if you are COVID-19 impacted and aren't able to pay your taxes, you'd be eligible for some assistance. But so far, Treasury's not wavered on that. There was a little crack in Treasury guidance where they said that if it was for mortgage foreclosure, to avoid mortgage foreclosure, you could potentially have a program set up. I argued at that point that foreclosure in Montana is the tax deed and tax lien process. And if we could avoid getting into delinquencies so you don't get into tax liens, which don't ultimately result in tax deeds, it is mortgage foreclosure. But so far, I have not convinced anybody of that.
So how about with ag? Because I mean, with the COVID shutting down the kill plants and stuff like that, and the price of cattle going downhill fast, I mean, it's really affected people are raising beef out here. So if they can't claim that that isn't COVID related and the ranchers need property tax relief, I guess that question how they come up with that. Because I mean, I heard that beef or cattle out here bringing 90 cents an ounce. Can't make money doing that. Anyway, thanks.
Commissioner, no, I don't disagree at all. And even the federal version, the state version of the Paycheck Protection Plan didn't contemplate ag producers, because you might be able to get even essentially waivable loans in the form of grants for payroll protection to keep people on the payroll to not work, but not revenue replacement. So when your assets depreciate during the pandemic, there's not a mechanism out there that's been created by the feds or the state to be able to offset those loss of potential profits. I think it should be considered. I think the state's version of economic stimulus should look to offset some of those losses that are directly related to the pandemic, but so far that hasn't happened.
Keep up the good work.
We're trying.
Thank you.
All right, we have a couple more in the chat box, and then we'll get back to the hand raised questions. So chat box, should school districts apply for themselves, or do the counties do this for them?
Do not apply for your school districts. They have separate pots of money and separate allocations that are outside the governor's coronavirus relief fund for local governments. Same thing for the tribes. There are separate distributions and direct distributions for tribal governments that are outside this. So we were persuasive enough with the budget office to say exclude all schools and exclude tribes. This is a source for local counties, towns, and cities.
Okay. And another question, if the counties do not use the full 565.5 million, can it be returned to Treasury, or will the state sweep it?
My belief is that the state will sweep it.
It would have to be for eligible costs, but they would try to use it for what they deem are their prioritized eligible costs.
All right, we have a call-in user with a hand raised. Call-in user number 26, your mic is open. We have a call-in user 26. All right, we will move into, have another hand raised. We have the H. Belk. Open.
Eric, this is a Commissioner Dolores Plumage. If, well, we don't have fire districts, but we have volunteer firemen. So would they be eligible for COVID assistance?
Commissioner, they're non-paid, right?
Right, volunteer.
I think you could make a claim for their work comp coverage because they're your county fire folks, right? You three commissioners serve as their trustees.
Yes.
So you can make the request directly for any incurred costs for the operation of that fire function from this period. So if there were training costs, fuel costs, work comp coverage costs, yes, those are eligible expenses that you can submit on their behalf.
The other one is I talked to a couple of commissioners from other counties, and if there's individual who needs to be quarantined or isolated, they're getting like a motel room and paying for the cost of the motel room and the sanitization of the room after. Is that allowable then if that's happening?
Absolutely. Those are hard incurred costs directly related to COVID-19.
Okay, and then there was because in eastern Montana for our counties, like we don't have a large hospital. We just have Billings and Great Falls. So for transporting for our EMTs, our ambulances, transporting patients, and they may be COVID patients, we're looking at like getting a decontamination, some kind of decontamination equipment. There was a county in Maryland that had done this. And I guess, you know, as you think of the needs that we have, and if the county goes ahead and invests in that, should we be checking with you to see if that looks like a good possibility it would be reimbursed?
Yes, and from two different sources. I think FEMA and the CARES Act funding should be checked, both of those. And even if you can get a partial offset by FEMA to pay for a decontamination unit, the remainder likely will be eligible for CARES. So check before you dig and loop us into those. I'll be happy to route requests like that through state DES and through the CARES folks to see to make sure you can get covered for that. And
then also if the equipment or if there was something that we wanted to pay for and it was costly, could the tribe or the county, can your entities come together to pay for it?
Yes, absolutely. Yeah. The tribal distributions I understand to have already been made, and I can't remember what the total was, but they've already received direct allocations with no strings attached. So absolutely cooperate with all your jurisdictions. If there's a major piece of something or investment that you're going to make related to this, coordinate it together and then make sure we can find funding sources to get you paid back.
Thank you.
Any significant expense that you might know about or be able to make a decision in the future about, let's get sort of a pre-approval if we can.
Is that am I on? Is that pre-approval from the administration, the Department of Administration in the state?
So you could run that through us and we could ask them. It would be informal, but I would just say, hey, we have a county that needs this. It's beyond their budget, and if they get saddled with it, just not workable. We want to know if it's going to be eligible when submitted. And see what we can say.
All right, we have another hand up, and then we'll jump back to the chat box. So this is, let's see, Brodell, your mic is open.
Oh, this is Phil again. I have to pick on Eric a little bit.
I expect it.
Yeah, I want you to know the picture behind you needs to be a little bit bigger next time. I mean, that's just, the other side. That has to, come on. Second of all, could the Flat County be part of the Indian tribes and could we just get reimbursements without asking for anything? I'd like a new fire truck, and I'd also like my Cadillac Escalade for the last 6 months. What do you think, sir?
Commissioner, if you do that, you will lose your tax base entirely, and then you will have forced yourself out of a job.
Okay, I just wanted to help. I didn't lighten up the comments here a little bit. Thank you.
All right, let's go back to the chat box. Can you discuss why FEMA is on the reimbursement request sheet?
Yeah, in the earlier conversations before the May 28th guidance, the state was going to be adamant and actually put a provision in that said that you had to make a request for FEMA reimbursement before you could apply for CARES Act. And the logic is this. Their goal is to make that money stretch as far as possible. And if you had a FEMA eligible project or FEMA eligible expense, you should get the money from FEMA first and then come to the CARES Act if there's any difference. That changed on the 28th because that guidance also put very clearly, provision says that you don't have to exhaust all additional federal remedies before you apply for CARES Act. So what the state's doing is that line on the reimbursement form, when you submit that, they're going to help you get FEMA funds. So they're not saying you have to, although they're really encouraging you to do that. And then they're going to take the initiative to make sure if it's a FEMA eligible product or reimbursable, that you're going to get FEMA funds for it.
And a related question, can CARES be considered part of the FEMA match? I've heard conflicting information.
As of the 28th, yes. Treasury originally said no, and then Treasury and FEMA said yes on the 28th. And what I'm hoping happens is that ultimately we waive the FEMA 25% match. The federal government needs to do that because now we're mixing federal funds with federal funds as match, which is prohibited in all kinds of different ways, but currently is allowable. So to get the CARES Act money to last as long as possible and to provide that match, that's why you see that concurrent FEMA eligible expense and CARES Act eligible expense.
I would add that if you fill out the spreadsheet and there's something on there that looks like it's FEMA eligible, and it turns out that FEMA it's not eligible, or for whatever reason FEMA doesn't pay, that does not preclude you from reaching back to get CARES Act dollars later. So if we start to near the end of the year and we've got what we consider FEMA stuff in there and counties aren't getting paid back, we're going to make a hard push to get the CARES Act money to pay for those, so that we don't leave those dollars on the table.
So I'm wondering if I can surprise Commissioner Briggs and see if he's got any update he's our guy on the National Association of Counties board, to see if he's got any update on further lobbying for everybody to acknowledge that FEMA should not have a 25% match.
Let me open Commissioner Briggs. Oh, you're open. You're good.
Process continues. I just had a call yesterday and I've got another call in 20 minutes that will be one of the many topics. We are gaining ground in the game, I think. The problem is that any of these changes that we make in this that are retroactive in nature, like when we try to change the CARES Act or we try to change an interpretation, it's generating a lot of issues from one side of the aisle that means they need to throw more money into the equation. So what we're running into is on all of these flexibility issues is there's a fine balance point being trying to be found of how to give us flexibility of funding without doing another $1 trillion package. And the only thing I think is pretty sure is you're not going to see another major shift until after the August recess. And we continue to bite away at these little things with Treasury on the matches and opening up the reliable expenses, what we can claim, what we can't. So not much of an answer for you. I don't have a magic bullet yet, other than to just tell everybody that the NACo staff is working extremely hard, trying to get us to the core principles of flexibility as far as how you choose to spend the money. But we're also quite cognizant of breaking the bank on a federal level. So you're not gonna see a lot of exuberance from MACo on a trade that gives us flexibility, but then has another $1 trillion price tag on it.
Great. Thank you so much. Okay, and then I think another related question in the chat, Governor Bullock said counties wouldn't need to do the mill emergency levy, but the state told me we should mill. What's the latest, and how is the state helping with that 25% match?
The state is on the hook for the 25% match, in my opinion, as soon as Governor Bullock waived the requirement to levy that mill. And first of all, I want to know who from the state is telling you to mill. Nobody gets to tell county commissioners to mill. You guys get to tell yourself that. And if you have incurred costs beyond your capability, which is in essence the reason for the emergency mill, you have the CARES Act to go to. So I would like to have a off the record conversation with you about who's telling you to mill and why you think you need to mill when there's $562 million sitting ready for your use.
Okay, and we have another question that is not about that. What are the limits in determining if an asset purchased for COVID-19 is reasonable and necessary, but will have a useful life on COVID response to be covered by the CARES Act?
Who's the accountant in the room that's asking these kinds of questions? So you're talking. This gets into a larger conversation about federal acquisition of assets, most capitalized assets that in some way you could depreciate over subsequent years. Treasury doesn't care about that. The deadline is have the money encumbered and spent by the end of December. So don't worry about the longevity of the asset you're purchasing. Just make sure the asset you're purchasing falls under the category of reasonable as determined by the state. It's the state of Montana that is going to be the responsible party for authorizing expenditures. So whatever it is, we'll help you clear it with the state before you make the purchase. Don't worry about the lifespan or longevity of that asset in subsequent years. Your auditors can help you with how you would book a federal asset paid for by federal money that may or may not be depreciated in subsequent years. That was a horrible answer, but
It looks like we're currently caught up on both chat box and audio questions. So if you have a question, now's a great time to ask. Oh, I just heard. George, you are open.
Hi, thank you, Ashley. So I go back to the question on the 45%, and now we have this wonderful local reimbursement program. And, you look at like Wyoming, they had the legislature divvy out their 1.25 billion. What are we going to do with the dollars that, it's going to be really hard in Montana, I think, to spend the 1.25 billion. How can we, is there an allotment we have, or is it just the incurred expenses we need for our counties? And a good example is like the two here on Bighorn County, both received lump sum checks to help with roadblocks, road checks, sentinel testing. And, in my county, we're arguing about, do we need face masks, when we're the hotspot right now in the county, and trying to save dollars. But, if the state has 1.25 billion, how can we best serve our communities, serve our areas? So, I guess my question is, what about the 45%? How did that come out to be the reimbursement program? Yeah, thanks.
Commissioner, those are great questions. And I have shared plenty of examples of other states that did provided a different model for distribution of their CARES Act funding to their local government partners. The state of Montana chose a reimbursement program, and they did it primarily because the state of Montana is the recipient, the direct recipient of federal funds, and is the responsible party for the use of any of those federal funds. It was easier, and it was less risky for the state to be able to be the entity that determines what's an eligible cost and then pay those costs, knowing that if Treasury came back and audited them, which they absolutely will, that they can pass muster. Other states chose distribution methods like you talked about. CARES Act was always intended to have 45% of those funds go to local governments. Not many of the senators and House members knew when they voted on the package, they all thought 45% was coming. Not many of them knew what that definition of local government was, in that Treasury only wanted to deal with large populations in excess of 500,000. So even our own state senators were saying, hey, local government's getting 45% of these funds. It's not in the bill. The May 28th guidance from Treasury helped us in that it said they expect 45% to get to the locals, but in Montana, it will be through a reimbursement format up to and until we get that flexibility Commissioner Briggs was talking about in terms of revenue replacement, or the strings are taken off the CARES Act funding so the state feels more comfortable doing a formulary distribution. And if that happens, the state will account for every dollar given to local jurisdictions as a deduction from that 45%. So even in a best case scenario, there will be some formulary distribution and flexibilities granted. And I agree with Commissioner Briggs. We won't see any significant legislation giving us any additional flexibility until August, September, October at the earliest.
We have another question in the chat box. We are still going to have a fair. Because of the additional staff needed to keep the fairgrounds clean, can we submit reimbursement for those temporary employees?
Yes, those are directly COVID-19 unbudgeted expenses. categorize them as social distancing, compliance, PPE, whatever. I mean, you just make sure that when you hire them and code them, that you're doing it so it's clear that those are additional expenses not budgeted for and incurred as a direct result of this pandemic.
Looks like we have another question from our three commissioners. Bell, your
line's open. Okay. This is Commissioner Plumage again. From our judicial part of the county, the judges, they're looking at perhaps using one of the buildings on the fairgrounds for their jurors. So is that something that is would be approved under CARES?
Commissioner, I believe so. If you're going to use something unbudgeted and new and different to allow for social distancing for your jurors, and it's a new facility, yes, absolutely.
We've heard rumors of the county buying motels for isolation. Is that legitimate?
Commissioner, legitimate is not the word I would use, but let me try and help explain it. There is a county that already had a transaction in process to purchase, I think with funds, a hotel, and they expedited that purchase so they could use it for COVID-19 response costs. That, I don't believe that is going to be reimbursed. This originally started in the Seattle, King County area, where Seattle proper did purchase hotels and used them for overflow and for homeless housing. And I think Missoula County saw that and sort of mirrored it, but we've talked to the state that likely is not going to be a reimbursable expense. Now, there are counties out there that rented facilities for emergency operations centers or for direct point of access for question and answers as they were going through shutdowns. They rented facilities that were likely going to be eligible expenses, like you talked about an additional building for your jury selection and jury pool things. Those, to me, are absolutely legitimate and rational and reimbursable expenses.
Thank you.
Is there a specific fund being designated by local government?
Yes, in terms of bars chart of accounts.
I believe so.
In April, the State Department of Administration issued some recommendations on how you could, on the payment side, distribute payments out or incurred costs through a COVID-19 bars chart of accounts. And they also recommended that you create a revenue. It's not a restricted revenue account, but it's a tag number to a revenue account so you can account for all the federal funds coming in through reimbursement from CARES. Now, when you do that, and if you do that, note that if you transfer it in through that bars chart of accounts recommended attachment as a federal revenue source, it allows for your auditors and the state auditors and the inspector general, when they do the audits, to follow those transactions. But then I'm recommending that you immediately deposit those funds into your general fund, because then you can use it for general fund purposes.
And does that include both CARES and FEMA monies?
FEMA is different. I think you could use the same revenue account for tracking your FEMA funds coming in, but there is usually additional requirements on your FEMA funds as they're coming in. And most counties know if you want help with how to account for and track FEMA funds coming in, get a hold of us offline and we'll get you in touch with the Department of Administration folks.
We have about 10 minutes left. If we have any last questions that anybody would like to throw out there, now would be the time.
Do we have Chantel on? Okay.
Oh, I just heard it. There we are. Angeline, your mic is open.
Thanks. The 2/3 rule for employees that have been substantially dedicated to COVID response. Yeah. How are they wanting us to document that? Or are they?
They are. I talked to Cheryl Gray, who's the division administrator at D of A last night about this because they've had some requests and inquiries going on. You might have been the one that made the request to them. And so they're going to err on the side of trusting your submission requests. I told her, I tried to explain to her that, counties, you're not, even if they're paid for out of different funds, you took somebody from general administration and transferred them over to the health department during this pandemic to answer phones. You're not making your folks fill out different time cards and billing back to a fund account, and nor do we want you to, nor does the state want to make you. So you submit and certify that you've repurposed those in general more than 2/3. That makes them eligible for it'll be born in that certification as you submit it over there.
Okay. Do you think they're at any future point they're going to lessen that 2/3 limit?
They made it up, and they made it up to try and comply with the Treasury guidance that said substantially dedicated. We sat in a room with them, and they're like, "What does substantially dedicated mean?" And we tried to explain, err on the side of a pandemic and give us credit for what it is. So they said, "Well, what if we said 2/3?" And I remember saying, "I don't think I can argue with that, but surely we're not going to have documentation showing 2/3." And they all acknowledge, yeah, it's the guidance documents. But it's a local government certifying that those were legitimate costs for an employee substantially dedicated to COVID-19 that they will pay for.
In the narrative on the spreadsheet, explain why you think they are substantially dedicated, and don't try and explain why you think they're 2/3 dedicated. Yeah. Substantially.
Well, and I'm seeing, and then there's repurposed staff. And so, like, we repurposed the commissioner's secretary to be on the public information officer team, but she wasn't spending 2/3 of her time. She was maybe spending half of her time. Is that repurposed staff, or do they have to meet that 2/3 threshold to be repurposed?
What are you doing?
They're supposed to have met that 2/3 threshold to have been repurposed.
Okay.
Yeah.
Thank you.
Looking for what?
Some more questions in the chat box. It moved. Okay. So regarding enterprise funds such as our fair, can we claim reduction of revenue due to social distancing because of ticket sales reductions?
Short answer, no. But if you're going to get recompensated or compensated for your law enforcement costs, your detention costs, and your public health costs, and you get that money into your general fund can pay your enterprise funds to offset those costs, or loan it with no expectation to pay back, or find ways. So this is the issue. This is what I try to explain to the state in terms of the revenue replacement portion of it. You folks out there in the field oftentimes book your revenues in this current fiscal year for your fairs that happen after July 1. You're selling advertisement, pre-ticket sales. You're going to have a significant deficit in your projected income this fiscal year for an event with an expenditure that you might not have in next fiscal year because you canceled your fair. So get the money into your general fund so you can make your enterprise funds whole as best you can, which Commissioner Mitchell ought to encourage you to bill for your detention costs, even if you don't think they're legitimate, if they can offset revenue shortfalls from enterprise funds in the organization.
We're going to jump back to a previous topic. Eric, I don't understand what you mean by revenue into the general fund when we are coding expenses into the quote unquote COVID fund.
So all of your expenses from all of your funds, whether it's public health, public safety, general administration, general fund, the coding of the COVID-19 expenses is so you can capture all of them and be able to track them. The revenue coming in is it's a federal source of revenue. So you always want to be careful with how that comes back into your accounts. And so D of A has suggested that you do the attachment on your fund, on your bars chart of accounts to be able to track the federal funds coming back in from CARES. Once that happens, I'm saying that if you have a separate public safety fund that you build for reimbursement for your law enforcement, you don't have to have that money come into the public safety fund. It doesn't have to go into the health fund. It doesn't have to go into the district court fund. It can go after it comes into your general fund to allow you the most flexibility for use of those funds after they've funneled their way back through. You can transfer it to the fund if you want, but I'm just telling you, you're not compelled to do that. And the general fund gives you the greatest flexibility to do what we talked about, offsetting revenue losses and things like enterprise funds.
Okay, looks like that clarified the question. Thank you.
And by the way, I'm not just saying that. I talked with D of A. I talked to Cheryl about this last night too, just to make sure that she's given consistent guidance like I am. If you call her, she'll tell you, and her staff at Department of Administration, code it in through that revenue account, but then use it as you wish.
Another question. I'm spending about 15% of my time dealing with COVID related and Unified Incident Command. Is this possibly admin reimbursable?
Are you an elected official that's asking that?
It looks like it came from S. Eggs. No.
You could still, if you had good documentation, show a portion of your salary is reimbursable. The 2/3 rule is for the generic, repurposed, and used staff. But if you want to do a pretty detailed accounting of your time spent, like your time in an emergency operations center as a public information officer, and you can document it, yes, those costs are reimbursable.
Okay, great. I have a couple hands up. I just want to make sure that they're not follow-up questions. George, are you good, or do you have an additional question?
I do, so public health, would that include our ambulance? Our ambulance?
You folks I know there are several counties out there that do have county-run ambulance services. Your ambulance services are emergency medical responders and first responders, yes. And if you get flack from the state for requesting reimbursement for those costs, please let me know.
Thank you.
All right. And Angela, I'm going to open your mic, see if you have a follow-up question as well.
Oh, I didn't. I just didn't take my hand down.
Perfect. Okay, thank you. Okay. Oh.
Decipher, but he says definitely if they don't, then let me know. So that'd be good for Brian and Mike.
All right. Looks like that one's just still up. Okay, I think that's all of our questions oh wait, nope. Yep, that's all of our questions that we have right now. And we are right at an hour. So I think this would be a great time to wrap up. Eric, if you have any last minute thoughts, or Jason or Dan.
I'd like to throw it over to Dan and thank him for convening these, but he should ask if these are going to be worthwhile into the future, because I think they are.
Yeah, so I think probably watch for about every other week now, Eric. You think that's about enough time that there's clarification and more information? So watch for about every other week. We'll get these set up. When we're done here, I'll reserve this WebEx room again, and we'll communicate to you next time we feel it's time to have another one of these town hall meetings. Great participation. I sure appreciate it. We have recorded this, and we will send out the link to the recording. And again, it'll be posted on our website as well as MACo's website. And I think that's about it. Unless anything else for the good of the order, we'll go ahead and stand adjourned for a couple weeks. Thanks, everyone. Stay safe.